Okay, good morning, good day, good evening, depending on the time you're catching this broadcast. It's your boy Pedro again. So I thank you so much for joining me up on this broadcast. Um, I'll be heading straight into action because there's no time for preambles, wasting, no time to waste. So quickly, I'll be talking about in my previous broadcast. I made mention of the fact that the US dollar holds to a very large extent the key to the performance of the financial market, both cryptocurrency markets and forex, and even the stock market. Because, like I said earlier, um, on the US dollar is the world reserve currency. Um, it calls the shots basically. So and that played out perfectly. I said for Bitcoin, the Bitcoin market to rise, we need the US dollar to weaken. Uh, Aside being the code currency uh, on the BTC pair, it also means that money being flow money money flows out from the US dollar into risk asset like the cryptos and the likes, crypto stocks and the like. So um, like I analyzed a couple of early on this week, it played out perfectly. You can see that the past week, um, US dollar has strengthened, and so we had a crypto week, Bitcoin and crypto week, and as well forex related pairs as well. Um, so here is what I think is going to play the likely scenario. What's likely going to be the scenario for this coming new week? As you already know, crypto markets will be closing at the close of today, while the forex market closed on Friday and be resuming back again today. So the crypto forex market, the crypto market, US dollar market, sorry, US dollar index strengthened within the past week, and we have been stuck in this consolidation. At least from a daily time frame perspective, we'll form this rectangle. This the dollar index has been stuck in this rectangle for the past 1 month plus now, dating back to early March. As you can see, this is 7th of March, and we have failed to break out of this rectangle, either to the up or to the downside. But this we're finally able to break out to the upside on the 5th April, which was on Tuesday, and this seems to be like a good sign for the dollar. But if you look closely, you get to see that this breakout seems to happen with low volatility. It seems to be like um, um, it's the breakout is coming with low momentum. How do I know that the momentum is not as strong as it's supposed to be? If you look at the RSI on the daily time frame, you can see a very huge bearish divergence. You know, um, starting from March 7th, when that's the beginning of this rectangular rectangular consolidation. We had a high of 99.418 and a close of 99.293. The market has failed to close above. This seems to be like the peak of this consolidation, and the market has failed to close above this close and this high. We've been in between, and for the first time in over a month, or a month rather, we finally closed above the top of this consolidation, which happened on April 5th, and you can see the value of that of the RSI from the daily time frame. perspective, on that day, at the close of the day, we had a value of 76.54. But on April 5th, after closing above that level, we had an RSI of 62.47. You can see how I've clearly drawn out this divergence. It's a clear case of, it's a very obvious divergence, a very big one. And in as much as nothing is 100% certain in this market, it's something to keep an eye on, something to keep an eye on. And then it's not just from this point to this point. You can see that the last swing high we had coming at March 28th, we had an RSI value of 63.02, and you can see that we finally when we finally got to close above that swing high, which was still on April 5th, we had an RSI value of 62.47, which is also a divergence between this point to this point. Not a very significant one, but nevertheless still a divergence to take note of. So we have a clear case of divergence on the weekly time frame. We have a clear case of divergence on the not very clear, but nevertheless a case of divergence. Also the divergence, the bearish divergence, is also shared on the weekly time frame. You can see that despite this huge candle close above the consolidation and even the last weekly high, we are having a lower divergence value, RSI value, which is also a clear another case of bearish divergence. So if you switch over to the intraday time frame, so the 4-hour time frame, you can also see a very clear case of divergence on the 4-hour. If you switch over to the 1-hour time frame, you also have a clear case of divergence as well. And you can see that on the 1-hour time frame, we're already seeing a serious reaction. The market's already reacting to that, reacting on getting to reacting to that divergence. So if this reaction continues progressively to onto the bigger time frames, for our daily, weekly, then we are likely to have a bearish week this coming trading week. And aside the fact that it's a bearish divergence, if this is to be the case, then this is a clear case of a false break from the US dollar. And aside that, it also the price action on the last day of the trading week, which was on Friday, clearly shows that this looks like this is a bearish pin bar. So that is a clear case of a rejection and bear pressure. So we are currently looking at, if this is to be the case, then and given the fact that we've been in a consolidatory mode, up down within this territory, it's more likely that if this bearish divergence and all these bearish signs happen to be the case, then we're likely to it's the turn of the bears to take over the US dollar market. Since last week was for the bulls, we're likely to see a bearish turn of events from the US dollar. So as you can see, if I switch over to the weekly time frame, you can clearly see as well that it's been choppy on the weekly time frame. From the weekly time frame perspective, it's been green since March 7th, red, green, red, green. So if this trend continues, we're likely to have a red week this week. And if we have a red week, red US dollar week, then we're likely to have a green week for cryptos and other forex related pairs as well. You can see also, this is another chart of the US dollar index. You can see this is also a trend line that has been well respected, a channel rather has been well respected by the market since dating back to May 2021 almost a year ago. So we've been in a very proper good uptrend. The US dollar has been very bullish since last year, almost a year now, and you can see that aside the loss of momentum from the RSI, you can as well see that we're forming higher highs. As from January 28, 2021, we started forming higher highs, but you can see that the momentum of the higher highs are unable to touch the top of this channel, unable to revisit the top of this channel, and that is also a clear case of a loss in momentum. This happened on January 28th. We had a similar break. We're stuck in a consolidatory mood between November ending and then January end, which was for 2 months, and then we finally broke out of it on January 27th. And you can see a clear case of divergence as well, and this was followed by the week, and the week closed the day on with a doji, and this was followed by a huge bearish week. If you go to the weekly time frame, you can see a bearish engulfing. We had a bearish engulfing with the following week for US dollar. So if this is likely to be the same thing here, we've had a close above consolidation, and if this is to be like a false break like it was here, we're likely to have a bearish US dollar week, and a bearish US dollar week means a bullish crypto and risk asset week, and forex related pairs week as well. So you can see clearly from this point we had a similar pattern, a false break, a break above consolidation, which happened with bearish divergence, and then we had, this was accompanied by, in style, by a bearish week from the US dollar index. So if this is to be the likely scenario, which I think may be, then we are likely to see a sell-off from US dollar this coming trading week, followed also saying that we close the day on a bearish pin bar as well. So a likely bearish US dollar week is going to translate to a bullish cryptocurrency week. So as you can see, we are clearly having a sell-off for the week as a result of the bullish US dollar week, but we are currently losing momentum. So if the US dollar is to become bearish for the week, then we're likely to see a bullish momentum from the from the cryptos, Bitcoin and co. So we may likely see like sort of a bounce off this trend line, which has been respected well by the markets ever since January or February that it's been formed. You can see that the market has respected this level, this trend line level, so well. We may see a break below it, and which may be like a false break of some sort, and then we may see a bounce back. If the dollar weakens, then we're likely to see a bounce from this region, like it has been the case in the past. It was the case last month, March. It was also the case in February. So if the US dollar stays weak, we're likely to see a bounce off from the Bitcoin markets and the cryptos as well. That is it from the crypto end. I'm going to be switching over to the forex end as well, so you can see how this is playing out so perfectly well. I'm going to be starting with the Euro USD, which is the #1 trading forex pair in the world, and you can clearly see that as a result of the sell-off, the bullish US dollar week, we had a bearish Euro USD week, and we are currently bouncing off support. This is a trend line that has been well respected by the market. It's been formed and well respected by the market since January 2017. That is dating back to about that's over 5 years now. The market has respected this. This is the third time we're respecting this level. The last time coming in March 2020, that's 2 years plus ago. And the market is currently, the level is holding well as support once again. And we can see a clear case of rejection of that level. We closed the week on Friday with a doji on the daily close. The day closed, Friday's close was a doji, which may a doji close on support may be a sign of exhaustion from the bears, from the US dollar, and that may signal strength for the euro. And given the fact that the US dollar may likely weaken this week, it may be a sign that the dollar, the euro, will strengthen against the dollar this coming week. And so all we need to, if you want to trade this, I'll be looking at maybe like bullish confirmation, bullish pressure from this point before thinking of maybe taking a long position. We may even see a close below this, with maybe like a false break and then a bounce from that point, or maybe the market may just decide to bounce off from without even closing, without even retesting the level. It may just take off one way. So it's a clear case of this is a potential trend reversal pattern. We're in a downtrend, as you already know. On the Euro USD, we're in a downtrend. You can see this downtrend line that has been well respected. We broke above below it. You can see this. We formed a new lower low on March 7th, and ever since we've been retracing, because since we're still in a downtrend, we just retraced up to this level on March 31st, and after the retracement, we're supposed to, we commenced a new impulse run. So we're supposed to break through this lower low and form a new lower low, which would have been a continuation of the downtrend. But unfortunately, we're unable to do that. That means that the US dollar is actually losing strength. It's losing strength. That is why we're unable to form a new lower low. We're currently bouncing off this trend line. Is with serious rejection of this trend line. You can see this is also happening in style. We're forming some sort of we're forming some sort of a bullish divergence in the process. You can go to the weekly time frame. You can see that this is a clear case of a bullish divergence from the weekly time frame, and we're having that on the smaller time frames as well. I think we're also having that on smaller time frames as well. Yes, clear case of bullish divergence on smaller time frames as well. So the signs are looking clear that we may have a bullish week for the Euro USD as well. So you can see clearly that if you look at the weekly time frame, you can see clearly that the dollar Euro USD is bouncing off support. If you go to the US dollar weekly time frame, you can see that what we have here is simply a mirror. It's like a mirror version of what we have. What we have on the Euro USD, the weekly candle close is like a mirror version of what we have on the US dollar index chart. We have you can see the candles look very similar. The difference is in the color and the position of the wicks. So that is to tell you that this is no joke. The US dollar has a very huge effect on the financial markets. We're seeing a clear case of rejection of the Euro USD. So if nothing is 100% certain, but if this is likely to be the case, then we may have, if the US dollar weakens, we may likely have a bullish Euro USD for the week. And since this is also a potential trend reversal pattern, we are having a a potential double bottom, since we're unable to break through and form a new higher high and lower low rather, and even close below the lower. We're unable to even retest the last swing low. So we're looking at a potential reversal pattern, so which may or may not play out, but at least for the interim we may have a move to the upside, just like we had back here in we had this back here in November. We had this between November and January ending, when the DXY strengthened. The DXY was stuck in this consolidation, and until it broke above it on January 27th, and we with low momentum via bearish divergence, we had this sell-off, and this also happened very well on the Euro USD. This happened on the 27th and as well. This close, which was a false break, we had, you can see that it is practically this is basically a mirror version of the DXY chart. So if this is to play out again, what we're having now, what we're seeing now is something similar to what happened that time. We had this false break to the downside, followed by which was like an end to this consolidation, and it seemed as if things were heading further down south, and then we had this. It's also happened with bullish divergence as against the bearish divergence on the US dollar, and then we had this move to the upside. So this seemed to be like a potential reversal pattern as well, but this was later invalidated by this huge bearish run to the downside, which formed a new lower low. So if not for anything, the Euro USD may strengthen, may not, maybe the part of the trend may not be reversed, but at least we may have a strong Euro USD, even if for the interim, at least to be just for the, even if not for anything, at least for the interim to the upside again. That is for the Euro USD. If you switch over to the GBP USD, we see something very similar happening. We have a potential double bottom forming as well. Potential double bottom also forming on the GBP USD. This is taking a little bit of time to come on. Yes, finally. So we have a potential double bottom forming on the GBP USD as well. We had this new lower low on 14th of March. We had a retracement. We were supposed to form a new lower low via this new impulse run, but unfortunately on getting to this point we had a reject. We had a strong rejection as well. So we're having a rejection of this this swing low, which is also a potential double bottom formation as well. And if you look at the weekly time frame, you can see that this is also happening with a bullish divergence as well. Switch over to the weekly smaller time frames, and we are not clearly formed on the smaller time frames yet, but we are already having some sort of divergence. It's something very similar to what is happening on the Euro USD as well. We're having a potential reversal pattern via a double bottom on the GBP USD. If you switch over to the other pairs where you have US dollar as the base currency, we're also experiencing weakness or weaknesses from the US dollar as well. Not reversal patterns, but more like continuation of weakness from the US dollar as well, from the base currency. So I'm going to be showing you that in a second as well. It's taking a little bit of time. Just hold. Okay, good, fine. So we have on the USD CHF, that is the US dollar Swiss franc. You can as well see that as a result of the last week, which was last bullish week for US dollar, we had this huge momentum to the upside, and we are currently at a resistance that has been well respected by the market for since last year. We are back to that point, and you can see a huge rejection to the ups of that resistance, which is with a doji being formed as well at the close of the day. We had the doji, which may also be a sign of exhaustion from the US dollar, and we may likely see a sell-off. If the dollar weakens, we may likely see a sell-off from this point to the downside again. So you can see this also been this sentiment also been shared on the US dollar card as well. We have as a result of the US dollar strength, in the past week we had this momentum, this run to the upside, and followed by a rejection of resistance. This trend line, which was support, has now been flipped to resistance. You can see multiple rejections of this trend line. This trend line is holding well as resistance. That is to tell you that the US dollar has lost or is losing its momentum, and as a result is unable to reclaim this trend line as support. You can see a confluence of a technical confluence around this area, where you have this trend line in confluence with this horizontal level. The market is rejecting this point, and is serving well, holding well as resistance. And as a result of the dollar weakness, we're already seeing bearish pressure, as you can see the daily close after is back-to-back days, or back-to-back rejection days. We're having a red candle close at the end of Friday, at the end of the week. We had a red day candle close, and just like earlier said, if the US dollar is to weaken in the coming trading week, then we're likely to see a sell-off from the USD card again. I've already taken so much of your time. I didn't expect to stay this long, and I really apologize for that. And thank you so much for your patience, and I hope you loved this. I hope you got so much value from this, and if you did, I will really appreciate if you smash that like and subscribe button. Feel free to share this as well, and leave a comment as to how you feel about this presentation. And I want you to remember that whatever I put up here is strictly for educational purpose and not to be treated as financial advice. Always remember that financial assets trading is a risky endeavor, so always endeavor to carry out your own research before entering any trade. I wish you all a lovely trading week ahead. Thank you very much. Goodbye. God bless you.